is the S&P tech sector, 11% from the July highs now. The chip sector about 20% below. One big question is, where is all that money going? CNBC contributor Carter Worth, the founder and CEO of Worth Charting, is with us live today. Carter, to answer, if it's coming out of tech, it's going where exactly?
Well, I suppose it can always just not go anywhere. It can stay in cash, and we know that certainly happens whenever a profit is taken, not immediately is always redeployed. But the thought was a lot of large cap money going into small and mid cap, and to some extent that is the case. But the more pronounced move, of course, is into defensive areas of the market, utilities, yes, consumer staples, yes, REITs and so forth. But we can look at the current circumstance of money flow, where it is going, in two particular old-fashioned consumer staples, Kelly, Philip Morris and Altria. You see here on the screen, I mean, these are year-to-date charts, right? I mean, that's a very straightforward, the colors, the lines are straightforward, approachable. Those two big stocks up 35%. And one could say, well, but that's the sector overall, but they're double the performance of the sector. The sector, of course, is Costco, Procter, Walmart, Coke. So those two big ones are doubling year to date the performance of their own brethren.
Do you, and it's always, they have so many issues to discuss, from traditional tobacco products to some of the more innovative ones that are constantly under regulatory scrutiny. But when you look at those charts, what does it tell you about this continued performance of tobacco names?
Yeah, so to my eye, look, those are very high dividend stocks relative to certainly Walmart or Costco or Procter or even Coke, as recently as 6 and 7% yields. And so I think you're looking at the face of fear, right? It's money saying, well, I don't want to be here, or I'm concerned about perhaps my tech holdings, but I cannot come out. I'm mandated to be fully invested. And so it's finding a place to go. But is that a really bullish thing, or is it, again, a fear-based behavior? Here is a comparative chart to show, of course, those two relative to tech. And tech is up only, 9%. They've tripled the performance of tech year to date. Which is to say, look, I don't think anyone's sitting around, at least I can't imagine, saying this is the way to win the game over the next 2 to 3 years, being long tobacco. Right. These are not growth businesses. They're basically bonds. And so it's when maybe just say one's out of ideas or one wants to be really defensive, let's just park it here.
Well, they're basically bonds is my big takeaway as we watch the performance of that asset class as well. And it's so ironic. People say social media is the new cigarettes, and now the money's gone from cigarettes into social media and to some extent now back. Yes. Carter, we appreciate it for now. We'll check back in soon.